What is good, Neo family? It's Rey-Jay back with another video, and in this video, I'm going to be talking about the one and only Neo stock and why I'm still very bullish for the somewhat near-term and long-term futures, despite it being in the red right now. I'm also going to be talking about the overall stock market and how this may have been affecting the price of Neo, as the Fed have made some very big changes that could cause the market to drop a little bit in 2022. Now, even though that is the case, guys, I don't think Neo is just going to drop forever for 2022. I think that there are going to be many moments where this thing still is able to run up and have some very good runs. And I still think that 2022 is going to be a fantastic year for this company because there are many bullish catalysts coming out. I also want to talk about this right here. Neo announced some very important things in their Twitter page that make me very excited. So I wanted to talk about those too. But before I say anything about that, before I talk about Neo's Twitter page, before I talk about what the Fed is doing, I do have to mention some very important things first. First off, I'm not a financial planner, guys. This is all for educational and entertainment purposes only. And also, if you guys can, please smash the like button if you want to see more videos like this. And not only benefits me, but benefits the entire Neo community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below in the description. If you do sign up for Moomoo, you're not only going to qualify for up to 5 free stocks, each worth up to $3,500, but you're also going to qualify for free real-time level 2 data for US stocks with $0 trading commission. So once again, please check out the link down below. And with that out of the way, let's get on with the video. So looking at Neo, it's not necessarily in a bad state, so to speak. It is down about 1.91%. It is kind of fluctuating around the $29 to $30 range. And even though this thing is trading like that, look at this right here. So Neo is down 1.91%, but look at Tesla, it's down 2.15%. Look at AMC, look at the S&P, they're all in the red right now, right? The Apple stock as well, the Nasdaq, they're all in the red. The S&P is down 0.09%. So the entire market is in the red right now. But if you look at the S&P in more detail, it's beginning to consolidate at this range. Now, it's not that far from the all-time highs. It's not in a bad state, so to speak. And I don't necessarily think that we're in a super bearish market just yet. The market looks kind of a little bit unstable, but it's not in the worst of positions, because if you look at the fear and greed index, we're not super fearful right now. We're not super greedy. We're just dead in the center at neutral, right? And that's because we used to be very greedy. Then we moved to a little bit more fearful. Now we're neutral because of what the Fed is doing. So if you look at the Fed, guys, there are articles coming out saying that the Federal Reserve is scaring markets with the triple threat of policy tightening. And if you actually look at what they're doing, we could see that they used to be very dovish in the past, and now they're becoming more hawkish, right? And this is because of inflation and other things like that, because the U.S. is not in the same narrow view of employment as it was before. So right now, employment is looking a little bit more narrow, a little bit more scarce compared to before, even if our unemployment rate isn't that bad. So what the Fed is doing is they're going to be tightening on policy, right? It was also noted that they're going to be tapering asset purchases at a faster rate, and they're also going to be expecting to raising interest rates, guys. They're going to be raising interest rates, and they're going to be teeing up a balance sheet reduction. So raising interest rates is shown right here. It basically states, according to Business Insider, that payments on everything from credit cards to cars could creep higher in March as the Fed is ramping up its fight against inflation. So what's happening is they're basically trying to vacuum up money artificially by raising interest rates to address inflation, which had been going up since the year 2020. Now, even though inflation is going up the way it is, guys, it's not the end of the world for the market, but the thing is they could start to raise interest rates as early as March, and that in turn is probably going to cause the S&P and other big institutions, other big ETFs, index funds, and so on and so forth to drop in terms of their prices. Now, what does this mean for Neo? As you guys know, Neo could drop with the market too. It could continue to drop. However, guys, just like Tesla, I think that it's going to act as a hedge to the market. I don't think it's going to just straight up crash and then just like get delisted like some people are thinking. That's not going to happen, guys. I think that Neo is basically at a very low valuation right now compared to where it's going to be in the future. And if it does start to drop, guys, I think it's going to be a hedge to the market because of very big catalysts coming out. So looking at this right here, this is the MACD right now, right? And showing that Neo is on a downward trend. RSI is a little bit down to 35.91. This means that Neo could drop as low as the $28 to $27 range once again because of the fact that it's in a bit of a drop, right? It's trading below every single one of its exponential moving averages, treating them as resistance, right? The 5 day one is its resistance. But at the end of the day, guys, I don't think we're just going to be red forever of 2022. I think there are going to be many moments where we start to run up because of big catalysts coming out. First off, look at this right here. It states, according to Reuters, that NEO's European road trip will earn bragging rights. Once again, they're going to be expanding to Europe very soon, and that's going to be very cool in my opinion. And the big thing to be talking about is the fact that look, EVs are huge in Europe. They're planning to expand to 25 different countries by 2025. So that's a very, very bullish catalyst for this company. On top of that, guys, their fundamentals are getting better and better and better as they're getting better valuations. And many big companies out there are saying NEO could go to $70 relatively soon. It also states right here, according to the Motley Fool, NEO is expanding its production capacity to meet the growing demand for its cars. The company is building a second manufacturing facility in Haifa. I'm not sure if I said that right, but the factory is expected to become operational in the third quarter of 2022. So imagine what's going to happen in the future. They have another factory. They're going to be expanding their numbers, delivering more cars, and their numbers are going to get better and better and better as time progresses, right? And what this means is, imagine you're an institutional investor. You're going to see their quarterly earnings reports get better, their EPS is going to get better, their revenue is going to get better, everything's going to get better over time. And that's going to be very awesome as time progresses because not only are they producing more cars, but they're going to increase their battery swapping stations, their technology, the amount of swaps they're doing. And it's very, very bullish news. So I think their idea of battery swapping is going to be very innovative and very awesome for China and other big EV sector markets like that. If you look at this right here, look at their Twitter page, guys. They're talking about the fact that 2022 is a promising, or they think it's going to be very awesome. It's going to be a very awesome year for the company, and they're going to improve in terms of their fundamentals. And the ET7 is going to start shipping relatively soon, and so is the ET5. So very bullish catalysts are coming out for this year, and that's the thing. Look, even if this year causes NEO and Tesla and many stocks to drop, eventually these big catalysts are going to cause this thing to have very good reversals, gain support at certain levels, and many investors are going to see the value in these, numbers and the value in these companies. And if you just buy and hold and wait it out, it's going to be a very good buying opportunity for the future because I'm still very, very bullish for this company. The fundamentals are there, it's doing next to everything right, and you have to think about this from an institutional investor standpoint. These big institutions, right? These big investors, what are they looking at? They're looking at production, they're looking at deliveries, they're looking at the EPS, they're looking at the revenue, they're looking at their earnings per share, everything like that, right? And that in turn is what's going to influence them to invest more. What if they absolutely crush it? So with NEO opening a new factory, with NEO doing all these big things, expanding to other countries, having new cars, building their brand, improving their lifestyles, I just see a lot of green for the future. It's just going to take a little bit of time, okay? So look, tomorrow may be another red day. Next week may see some red too, but eventually we're going to gain support and we're going to start creeping our way up as the fundamentals get better as soon as 2022. I see a lot of good moves coming. So I want to thank you for listening, guys. It's not the end for NEO, so don't let your emotions get the best of you. And remember to remain calm, cool, and collected and be prepared to buy these dips. So I thank you for listening. Never give up on your dreams. And I still think 2022 can be a fantastic year for NEO. I thank you and peace out.